Hightower Chief Investment Strategist Stephanie Link here. Let's kick it off with the broader market. A mixed picture for the major averages. Dow lower, S&P 500 and NASDAQ in the green. The S&P and the NASDAQ are currently on track for a record close. Steph, that's sort of been a theme this week, which is growth outperforming the cyclicals and the value. Consumer discretionary and technology are the standouts on the day and on the week. What is driving that?
Absolutely, Sarah. You hit it right on the button there. I think it's because, unfortunately, we've had another uptick of COVID around the world, right? That's the kind of concerning news. And so that will force growth to slow. I'm encouraged on the positive side that we saw another week that saw October be better and recover from the summer doldrums, right? We had a growth scare in the summertime and in September. And October, we saw, we're getting the data points over the last couple of weeks that it actually recovered. And we even got a November data point today that showed the same thing. So you've got this push-pull thing going on. But I think the economy is more important. The data points are more than important because we've made inroads in terms of COVID and that sort of thing. So I'm looking at ISM services. You and I talked about it 2 weeks ago at record levels. This week we had industrial production up 5.1% year over year. The government released retail sales this week, 16% year over year growth, and 22% growth from 2019 levels. And then the November data point that I was referring to is the Philly Fed, and that was almost double the expectation. So you've got good news on the one hand about the economy. You even have the Atlanta Fed forecasting GDP for the fourth quarter to be 8.7%. I don't know if it's going to be that high, but it's going to be higher than 2% that we saw in the third quarter. So that's the good news. And then the bad news are these COVID cases. Let's watch that. And as a result, you've seen another round of rotation, to your point, back into growth, back into secular tech, away from reopens. You know I'm in both. I like to have a barbell and diversification. I was very impressed, though, on technology and FANG in general. Not only were earnings and top line good, free cash flow was at record levels, margins were higher than expected, operating leverage. So you know you can make a case to own secular tech. I just think the reopen, economically sensitive companies will also benefit as we see a recovery in the economy.